Hello everyone, welcome back to my channel, The Tech Life Set. Today, I want to show you something very interesting, a solid stock that I believe is on sale. But before I reveal, let's talk about how you actually know a company is a good buy. Because falling prices always doesn't mean it's a deal. In the next few minutes, I'll walk you through what I look for, and later, I'll show you which company I brought and why. Now, this is not a financial advice. I'm just sharing what I'm doing and why I believe that this could be a good long-term play. What makes a company worth buying? First and most important, their business model. Is the company doing something that people will always need? Second thing is financial health and growth of the company. Is the company growing over time? Can it handle downturns? Third important thing is price or valuation. Am I paying fair or discounted price compared with how the business is performing? Let me break this down into simple examples. If the company provides essential services like home maintenance, services are still needed even during bad economies. If its revenues are increasing year after year, which shows that the company is doing something right and people believe in the company. And lastly, if the stock is trading at a significant lower price, this might be a good time to buy. If these three checks align, business plus financials plus price, that's when I feel comfortable saying this might be a good time to buy. Now, remember, I also do short-term or positional trading, where fundamental analysis doesn't matter much. It's all about technicals and charts. In other words, following the trend just to make some money. Because what do experts say? Trend is your friend. Now that you know how I filter the company, let's jump into the company I picked. The company is called First Service Corporation and the ticker symbol is FSV. Know that this company is listed both on Nasdaq and Toronto Stock Exchange. The company is Canadian based, but it also operates in US. Before we dive into the technicals, let's talk about why I believe that this company is a good investment. Especially after the merger with Crossbridge, First Service has become a giant in the residential property management industry. Think of this company as a backbone for the property management services. First Service Residential is their biggest division. They manage condos, apartments, and townhomes. Apart from the residential, they also have so many child companies. I brought a small initial position today at around $219. Since I'm a Canadian citizen and I believe in Canadian dollar in long term, I purchased it on TSX instead of Nasdaq, but you can do it at your own comfort level. Being a mid-cap company, in the last fiscal year, the company has generated around $5.2 billion in revenue. That is a solid number. Debt to equity ratio is about 0.83, which is modest, while the trailing PE is at 54, which is at a little bit higher end. The forward PE indicates 27. What does these metrics tell me? Strong business, stable services, and sound finances. Recent fall is just a short-term noise that was the result of the earning report, which I want to capture. Now, what is my strategy? I didn't buy a large position all at once. Now, what do the experts say? Don't catch a falling knife. Since it's already fell by 24% from its recent high, I thought this is a good point to enter. If price falls further, I'm going to average down at key support levels. For example, let's take a look at this chart and do some quick technical analysis for strong support and resistance zones. Even though I purchased the Canadian stock, I'm going to do the analysis on the Nasdaq listed stock. The chart differences between US stock and Canadian stock are mostly due to the forex changes. So for better understanding, I'm going to explain support and resistance levels on US listed stock. Now, if you look at this, the recent high was around $209 right here, right? And it was also, I believe, all-time high. That's right. After the COVID fall here, the company did really good and gave a return of 245% in 2 years. That is beyond next level. After that, it corrected by 44%. After giving that much returns, this correction is much needed. And since June 2022, look at this chart. How nicely it followed the trend and support and resistance levels. So from recent high, if you look at it, right after the earning reports, it fell by 16%. As of today, 17.5%. Right now, it is exactly at the key support level, which is why I took my first position. But as per this chart, there is a possibility for market to correct by another 7 to 8%. If panic increases and the stock falls beyond that point to the 52-week low, that is another 23%, I am happy and willing to take that risk. That is exactly why I didn't go all in today, because chart indicates that there is a probability for some more fall. Since we cannot time the markets, we have to enter somewhere, right? And I thought today is a good time to start. So I am going to average at 146. That's my key support level, next key support level, and 130 to 135 between that range, and lastly at $110. That will be my last point to average down. Any fall beyond that, I'm just gonna wait for the recovery and I'm fine with it. This is less than 10% of my portfolio, so I'm fine. I do not mind these corrections.
I don't know.
But I just believe that the company has so much potential, and people will always need services like home maintenance, building management, all the financial services for the buildings. And First Service also has a beautiful concept of acquiring smaller companies and making them better. Especially after their recent merger with Crossbridge, the company became solid. It's the biggest residential management company in entire North America. My time horizon for this stock is 2 to 3 years. I'll let the business grow. I'll let the price recover. I am not chasing the quick flip. So my friends, these are my reasons why I picked First Service to add to my portfolio today. Just like sharp fall, if it recovers sharply, if it gives a 20% return, I'll exit my position, because most of my portfolio is index funds. Once any individual stock gives me 20%, I'm done. I take my profits, invest in index funds, take a step back, chill and relax. Always remember, discounts only matter if the company is solid. It has good foundations. Along with that, having a plan really matters. You cannot go all in altogether at once. Especially if you're going big, you have to be careful. You have to have a plan. Never ever trade emotionally. Have a plan ready, know what you're doing, then take a trade with confidence. If you found this useful, please hit that subscribe button, like and share this video to your friends, and let me know in the comment section what you think. Till our next video, stay disciplined, stay patient, and think long term.